Hey guys, welcome back to another edition of the Market Review. My name is Vasily. I'm a professional forex trader and trading coach. For today, I have two very interesting examples of trading the head and shoulders pattern. I will show you how do I project the entries for the head and shoulders trades, where I place my stop, and how do I identify targets. Moreover, this week I have very interesting discussion with my students and followers concerning the win rate in trading and does it really matter here. So we will discuss my take on that, and I have something interesting to show you. So hope you enjoy this video, and always don't forget to like it and subscribe to this channel. So let's go to the charts and start with oil. So I'm on the oil chart right now, and I know that many of you are now looking for the long trades, and you really expect that because of the fundamental data that we have right now, because of the deals that the major oil producers are going to make right now, the prices should grow in value. The problem is that probably you are right, but it's very difficult for us to tell exactly when it's going to happen. And if you just blindly buy the market, not taking into consideration the current prices and where the market is standing right now, probably you will suffer a very significant drawdown before the market actually reverses. Yes. So here, please pay attention to structure. On 4-hour chart, what should you notice is that currently the market is trading in a very interesting horizontal range. On the upside here we have our structural resistance, and indeed it is right now the key resistance for the market. You see how many times just recently the market reacted to this level, and how strong rejections we see each and every time market reaches this level. And here goes our current market lows, yes, our current structure support. And you can see that right now, technically speaking, the market is trading just in the middle of the range, right? And from current perspective, from current prices, you should realize that that our current support is too far, and buying from here is very risky option for us. The best option to buy right now lies on this structure support. Next week I am planning to buy from this area right here, and my decision will be made just based on the harmonic bad pattern that I have found right here. And if you want to know my entries, my stops for this trade, follow me on Telegram, Twitter, or Facebook group. The links will be in the description below. There I gave the precise explanation of how I will trade this long setup. Yes. So our safest long entry right now is perfectly lying on this structure support right here. However, if you are more like the long-term buyer and you're looking for the long-term buying positions on oil, here we currently may expect a formation of the classic reversal pattern, the head and shoulders pattern. And it might be quite difficult for your eyes to identify it right now, but pay attention to details. Here goes our swing to the downside, and it gives us the perfect foundation for the left shoulder of the pattern. Here is our current market low, and it gives us the perfect head for the head and shoulders pattern. Yes. And here goes right now the right shoulder. The market right now in the process of completing the right shoulder of the head and shoulders formation, right? So if you are really looking for the counter trend trading opportunity, if you are looking for the major reversal of the market, the only thing that you should wait for the bullish breakout of this structure resistance to the upside. Yes, it is the only option for us with the current prices. We wait for the bullish breakout above this neckline, and then we buy on pullback, expecting the continuation to higher levels of structure. And indeed, if the market breaks that level, if it goes higher, then our targets will be extended to this level right here, our next resistance. And then if the market will be able to break that, then the potential for growth will be unlimited and the chances to catch a great winner will increase. But for now, no indication to buy. We will buy with you the current support, expecting the pullback, but long-term buying positions will be reasonable only after the breakout of this major resistance. Also, take into consideration that the trend is still bearish, and it is always possible that the market may can just go lower. So in case of the bearish breakout of our range, yeah, I bring back just our range. This is our current range. If the market just goes lower and breaks this range to the downside, of course, our bias will be more and more bearish, and it will be only a strong signal to sell for us. And who knows how low we're gonna go next. Yes, so adjust your trading plan accordingly and follow oil. It will be really interesting to see how it unfolds next week. So this week turned to be kind of negative for my trading strategy. I took 3 trades in a row and they all turned to be losers, yes. And based on that, we had a very interesting discussion with my students about the accuracy of our predictions in trading and win rate. And what I notice is that many traders just are looking for the win rate. They want to increase their winning chance, neglecting and forgetting about one very important thing that is called risk to reward. So it is quite clear that even with the 90% win rate, you still can suck in trading. The problem is how much you win and how much you lose per each and every trade. So let me give you an example how you can be a winner if you win just 50% of the time. Yes, so let's go to the charts. So the average risk to reward for my trading strategy is 2 to 1. So for example, $100 at risk, I am planning to win $200. Yes, so just imagine if we take 10 trades in a row, 5 turn to be losers and 5 turn to be winners. So let's see how it looks for our statistics. Yes, because yes, we're just 50% accurate in our predictions, but what's happening with the real statistics? Here goes our risk per trade, and we take 5 losing trades in a row. Yes, this is the 3rd trade, 4th trade, and then goes the 5th trade. Yes, so this is our risk for 5 trades, and this is how much we lost during this trading 5 trading positions. But what happens when we start winning and when our next 5 trades in a row turn to be winners? Yes, so this is our reward per trade, and this is our first trade, and you can see that 1 winner engulfs 2 losers, right? And when we have just 3 winners in a row, we already make profit. Yes, you can see that all the losses are now covered. We are now make profit, and adding additional 2 winners here, you can see that we already made really a lot of money here. Yes, so you can see that only aiming at win rate, you neglect and forget about risk to reward. And if you really make more winning the market when you lose, you already have the edge over the market. And if you even accurate 50% of the time, you can already make good money on trading. Yes, so never forget about risk to reward. And if you, for example, subscribe to some signal service and the only thing that the guy is forcing is the win rate, always check what is the average risk to reward per trade that this trader takes. Yes, and it is very, very, very important. So now let's discuss pound New Zealand pair, and I will show you the trade that I'm planning to take there, and there we will also discuss the risk to reward. Yeah, so we are on the pound New Zealand chart, and on pound New Zealand here we start the top-down analysis, and our task first of all on a daily to identify what is the current market trend. And you can see that on the long term, the market is clearly bullish. And you can see that from August 2019, the market keeps setting new higher highs and higher lows, right? The other thing that we need to identify in the daily time frame, we need to identify the key structure, the key structure level. And here I want to focus your attention on this structure right here. This kind of narrow structure that where the market is trading right now. You can see that on Friday the market reached this level and formed a doji formation, and for us it's a very, very good signal. It is the indicator that probably this level that we have identified, it is still important for the market participants, and maybe because of the current bullish trend, because of the historical significance of this level, maybe we can expect the pullback from this level and potential bullish continuation. So now our task is to check what's happening on the lower time frame and look for the confirmation of our predictions. So I switched to the 4-hour chart, and here let's precisely analyze what's happening on the key structure that we have identified. As you can see on the 4-hour, we also have a minor structure right here, a minor structure support. Yes, and you can see that how the market started to coil based on that level. And on 4-hour here we have the perfect example of the inside bar formation. You can see that here goes our strong bearish candle, and all the next candles are then trading within the range of the so-called mother's bar. So very, very, very perfect signal of the consolidation. And though inside bar, it is not bullish or bearish pattern, it is still a very important clue to consider here. And remember, trading the inside bar, we never know to which side the market will break, but the side of the breakout of the inside bar shows us the future direction of the market. But based on our daily predictions, based on our daily analysis, here with you we will be looking for the bullish breakout of the inside bar to the upside. Yes, to buy the market expecting bullish continuation. But now let's check what's happening on the 1-hour chart and try to analyze the situation there. So we switch to 1-hour chart, and here so many details appear. So still here is our structure level, here is our kind of the inside bar that we notice on the 4-hour, but we now take away all that, and what we can notice with you here is the classic reversal formation, the head and shoulders formation. Yes, and here goes our neckline, the current resistance, current minor resistance that the market respects. And here goes our head. Yes, so let me draw the pattern for you. Here goes the left shoulder, here goes the head, and here the market right now forming the right shoulder. So how do we trade this pattern? To trade this pattern correctly, the very, very, very important requirement for us is the bullish breakout of the neckline to the upside. Yes, this is what we are looking at, and this is what we need to confirm the reverse. So our plan for next week will be to wait for a bullish breakout of a neckline and then buy the market on pullback, expecting the continuation to the upside. Yes, so our position will look like that. We'll wait for the bullish breakout, let the 1-hour candle close above our neckline area, and then we set the buy limit order. We will buy the retest of the neckline, and we will aim at this structure right here. We will aim at this horizontal structure right here at 2071 level will be the perfect initial target for our trade. And we set our stop below the right shoulder. It is the safest stop, and I always trading the head and shoulders. I always place my stop below the right shoulder. And also here I would add one more condition. Here we have some minor structure, and based on that level right here, the 20625, once the market reaches this area, we will set our stop to break even to protect our profits. Yes, so this is our initial target here for the trade, and for the continuation we will then aim at the current market high. Because the trend is still bullish, it is quite possible for the market to reach this high level. So for the second target we will aim at this level. So you can see that the potential profit for this trade is very good, and trust me, head and shoulders formations are very accurate, and of course the accuracy of predictions, the accuracy of the setups is always higher than 50%. And you can see that with such a win rate here, with such a potential for profit, you can imagine how efficient this pattern is, even if 50% of this pattern are correct. Yeah. So pay attention to Pound New Zealand. Here is your trading plan. Follow that. Remember that if the market goes below the head, then we switch to bearish buys, and then we will look for the short trades. But from current perspective, the setup is still bullish. Be patient, let it break the neckline, then execute the plan, and I hope that you will make nice profits on that. Yeah. I hope you enjoyed this weekly edition, and if you like this video, don't forget to subscribe to the channel, don't forget to leave a comment, don't forget to subscribe in other social networks, and thank you for being here, guys. Really, I appreciate that you watch my videos. It's really respect.